Ladies and gentlemen, the next presentation is going to be very, very informative. The next presentation is on the GST structure for redevelopment projects. And for that, let me introduce you to the speaker, Mr. Vijay Thakker, IRS, retired. Shri Thakker, IRS, retired from CGST and Customs after putting in 37 years of service. His area of skills like gathering intelligence, search and seizure operations, investigations, drafting of show cause notices, preparing of order in original apart from his expertise in customs and DGFT matters. Shri Thakker has worked in various field formations like Director General of Central Excise Intelligence for more than 7 years, Commissioner Appeals Office, Audit Section. He has also worked in various field formations of customs, mainly at international airport. Shri Thakker has been a master trainer on GST implementation for senior officers. Please help me welcome everybody with a huge round of applause, Mr. Vijay Thakker, IRS, retired.
The subject is the GST structure for the redevelopment. In fact, in GST law, there is no specific mention about redevelopment in the GST law. So its definition is taken from the RERA Act. So development includes redevelopment, right? There are two types of main project: real estate project, and second is residential real estate project. Definition is available in the RERA Act. TDR. Now, any developer want to develop a property, he has to take land. It may be on purchase or it may be on under the development right. So land is a must requirement for the development of TDR is a main raw material, we can say raw material, because without that land is not available for development. In the GST, after 1419, there are several notifications which governs the GST law related to development and construction industries. So notification 319 having the change in GST rate. Notification 4 is exemption to TDR. TDR is the main headache for the industry, no? So there is some exemption I will discuss later on. Exemption to TDR, FSI and land premium. Notification 5, reverse charge for TDR, FSI and land premium. Notification 6, time of supply for the JDA. Time of supply will determine the time of liability when to discharge tax. 7. Some of the builder may be knowing that when now this in the new scheme, rate of property, GST rate is 5% or 1% or 5%. But it has so many conditions. One of the conditions is that they have to consume materials and service received from the registered person. Up to 80% limit is prescribed. Beyond that, you can purchase from the unregistered dealer. In any shortfall in the 80%, it will attract reverse charge on the goods and service received from the unregistered supplier. That is governed under Notification 7. Notification 8 prescribes the rate of tax, 18% of the material received from the unregistered person. Any shortfall requirement from the unregistered person will attract 18% GST. For that, there is specific notification. Affordable housing. it will attract 1% rate, excluding the land value. Non-affordable or other than affordable, that will attract 5% GST. Commercial property attracts 18%. However, the developer who were prior, whose project were ongoing as on 1/4/19, and they have exercised an option to remain in the old rate, 12% or 18%, they can continue. For that, they must have exercised option with ITC. For this concession rate of tax, there are various conditions. Main condition, GST to be paid in cash, no ITC, no ITC. 80% supply from the registered person, compulsory. Any shortfall in 18% if received from unregistered dealer, GST to be discharged at the rate of 18%, irrespective of where the supply is classified. Commercial apartment opted for old rate with ITC, 18%. And residential apartment will attract 12%, right? Notification 4 is prescribed for services provided by that the promoter shall be liable to pay tax. Yani notification 4 is the authority to charge tax from the promoter. Similarly for lease, this is notification. And notification 5 has to be read with this 4. Notification 5, wait a minute. Now, how to compute tax payable on TDR? Generally, when the developer acquires the land on TDR basis, certain conditions are there. One of the conditions, the member, existing member, for the redevelopment I am talking, redevelopment के लिए जो land लेते हैं, तो उसके अंदर जो existing member है उसको flat देना होता है, free of cost. तो free of cost अभी for them it is a free of cost, but GST department will ask for the payment of tax on the free flats given to the members, on which tax is payable. So that is a part of consideration of TDR. So TDR includes two parts. One is a free property given to the members, which will attract tax at the respective rate as per notification 3. For balance amount, there is one condition, कि unsold flat, on completion of certificate received, there will remain unsold flats. So on which GST has to be calculated and that has to be paid, not on the entire amount of TDR. It is a misconception because part of the payment is paid, part of the GST is paid on the flats. TDR value ki jo hai, it is a two part. One part is flat given free of cost, on which tax is already paid, and for balance amount, which is unsold units on the date of completion certificate, on which we have to work out GST payable. For this, these are the steps. फर्स्ट रेसिडेंशियल जो अपना अपार्टमेंट होता है जो कंस्ट्रक्ट करना है उसका जीएसटी पेएबल गिनने का है, उसके बाद अनसोल्ड का गिनने का है, और देयर इज वन और अदर कंडीशन कि जीएसटी पेएबल ऑन अनसोल्ड यूनिट्स शैल नॉट बी मोर देन 1% or 5% value of the unsold flat. So whichever is lower has to be paid. So these are the three steps. If this project is including residential plus commercial, for that this formula has to understand critically, because for residential only exemption is given. So a TDR exemption is given to this extent and that tax is payable by the promoter on the reverse charge. So TDR, two component, free flats given is liable to tax, that is a part of TDR. Unsold flats, tax is payable by promoter on reverse charge basis, and that it has to be calculated in this manner. This is continuous step. And by this condition, minimum out of these two steps, which comes minimum, has to be paid. Notification 6. It defines two classes of the registered person. One is developer, promoted developer, and one is giving land on the lease. These are two persons liable for tax. You can see here, landowner is not liable to tax, only promoter in two cases. कौन सी प्राइस पे टैक्स भरना है, on which price tax is to be paid. This is the value of how to be computed. It is generally in the form of construction service. This notification 7 is in relation to 80% threshold limit prescribed in notification 319. What 319 says, 80% material has to be come from the registered person. Any shortfall in that will attract GST at the rate of 18% payable by the promoter. So this notification prescribes that RCM. Supply of goods or service other than development rights. This service is excluded from here because it is separately charged. So remaining services are chargeable here, which is provided by unregistered person. Similarly, goods purchased from the unregistered person and is liable to tax under reverse charge by this notification. Cement. Cement is also covered here. Capital goods also covered under here. If it is received from, supply is received from unregistered person, this will attract reverse charge in terms of this notification. While notification 8, one entry is introduced in the notification 1001 by 2017. It is a prescribing rate of goods received from the unregistered person. This is scheduled 3 entry. It will attract 9% GST. This notification will attract 9% GST for goods. Now question comes, if goods purchased are different, having different rate of GST, but by this notification it will attract flat 9%. It may possible goods may be having a lower rate, but this notification stipulates that they have to pay at the 18%. This is the taxation procedure. Ultimately, whatever tax required to be paid by the promoter. TDR, I have explained that there are two components. One is the free supply of flats to the members. Second portion is unsold premises on which tax has to be paid by the promoter. So TDR is entirely, अगर देखें तो entire TDR is not taxable. Only unsold premises portion is taxable. That they have to pay because promoter is paying tax on the free sold flats. So that is also part of TDR. This is the main ingredient of the TDR. This dispute is pending in the Supreme Court, whether TDR is liable to tax or not. It is presently under dispute. Tribunal has given decision in the favor of trade, but it is appealed by the department and pending in the Supreme Court. In GST regime, these three rulings are that, but it is also against the SSE. It is in favor of the department. So presently nobody can say that TDR will not attack GST. It will attack GST. That is sure. Any question? For redevelopment, there is nothing specific in the GST law, but these are the rates these are the important notification. One have to go through it. Some intricacy is there, how to calculate the 20% supply received from the unregistered person, and this value of unsold premises for flats on which tax is to be paid under reverse charge by the developer. These are two main key issues in this entire GST
Any,
as far as this redevelopment is concerned.
any questions for Mr. Thakker? Yes.
Thank
My
you.
colleague will give you the mic. She's back. We have one question, sir.
Yeah. हाँ 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 Hmm. Yes, see, existing member will ask for the units because they are surrendering their rights. Their rights is transferred to promoter for development, against which they will definitely ask for the flat. So that flat will be given by the, constructed by the promoter and given free of cost. Society will have not to pay anything, but on which tax has to be paid, because it is a part of consideration of TDR. So tax has to be paid on it. And the units which remain unsold on the date of completion, on which we have to work out as per step 1 to 3, and you can have to pay the tax. So this is a, see, one representation is from trade and industry that there is double taxation, but actually there is no double taxation, because TDR value जो है, that is given on which tax is already paid. It is a part of TDR. So tax is already paid, and against which remaining FSI, the developer will sold on his own account. It is his profit or whatever you can. So on which tax is paid, this cost on free flat cost, that is included in this. So tax is paid on that, and while supplying the free flats, it is also tax paid. So industry is telling that it is a double taxation, but actually in fact not double taxation, because TDR is separately taxable.
Thank you so much, sir, for taking the question, and I request you to please come on the center, and I request Ms. Sapna Srivastava to come up on the stage and give a token of appreciation to Mr. Thakker. So, everybody, let's put our hands together for Mr. Thakker. Very knowledgeable session on GST.